This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Inventory control. Now let me explain what it is we're talking about here. It's looking at how we should go about ordering goods from a supplier. Now in real life there are lots of different ways in which you can go about ordering goods, but the way we consider here, I'll illustrate with figures almost immediately, but quite importantly, we consider ordering fixed quantities at regular intervals. Now let me explain quickly what I mean by that. Suppose I tell you that we need 12,000 units a year. That's how many we need. And how are we going to order them? Well, we assume, for what's going on in this chapter, that we are going to order fixed batch quantities. So, for instance, we could order 1,000 each time, in which case we'd need 12 orders a year. So we'd order once a month, a fixed quantity each time, 1,000. That's one way we could order it. But another way, instead of that, we could decide to order 2,000 each time. We still only need 12,000 a year. And so if we're ordering 2,000 each time, we'd be placing 6 orders. We'd be ordering every 2 months. And of course I could go on and on. We could order 3,000 each time, in which case we'd need 4 orders a year, and so on. So that's the situation we're looking at, fixed quantities at regular intervals. And the purpose of what's coming in a moment is to decide which would be the best way of ordering and which would be the cheapest way. Would it be cheaper to order 1,000 each time and have 12 orders? Or would it be cheaper to order 2,000 each time and have 6 orders, and so on? And why should it make a difference? Well, there are 3 costs that are going to be involved, and they're listed on the first page of the notes. First of all, the purchase cost. Obviously, we're having to pay for these goods, but over a year, it's going to be the same whatever happens. You know, if these units are costing $5 a unit, over the year, we're going to be buying 12,000, and so we'll be paying $12,005 whatever happens. However, another cost involved, there'll be a reorder cost. What the reorder cost is the cost involved every time we place an order. And there are likely to be costs involved. There could be just the administrative costs, you know, preparing the orders, or obviously a delivery cost. If I told you that we had to pay $100 delivery charge every time there was an order, well, over the year, if you order 1,000 each time, it needs 12 orders, and we're going to have to pay this $100 12 times. Whereas if we ordered 2,000 a year, we'd only need 6 orders. Over a year, it would be cheaper. We'd only have to pay the $100 6 times. The third cost, though, is the cost of holding inventory. There's going to be a cost of looking after our inventories. Things like rent of the warehouse and so on. Or even the cost of money tied up in inventory. The more inventory you've got, the more money is tied up that could have been earning interest. And so more inventory will mean we're earning less interest. It's costing us to hold inventory. And what's going to happen here? If you order 1,000 each time, if I draw a little graph over time, you'd start off with 1,000 units in inventory. But over the month, we'll be using it and the inventory will fall down to 0, and then we get another delivery of 1,000. As we're using it, it goes down to 0 and so on. And so if we order 1,000 each time, the inventory keeps going between 1,000 and 0. On average, there'd be 500 units. And we assume the cost of holding inventory changes day by day. If there's 1,000 units, it's costing a lot. If there's no units, it's costing nothing. But over the year as a whole, on average, it's as though we've 500 units in inventory throughout the year. But what happens if we order 2,000 each time? Start off with 2,000. All right, it takes 2 months to use it, but it drops to 0. Then we get another 2,000 and so on. Well, on average, we'd have 1,000 units. And the more inventory we're holding on average, the more it's going to cost us in terms of this holding cost. Now, I hope that's making sense, but to make sure, let me show you exactly what I mean. Turn to example 1. Yanis has demand for 40,000 desks per annum, per year. The purchase price of each desk is $25. There are ordering costs, $20 for each order placed. So every time we place an order, it's costing $20. And there are inventory holding costs amounting to 10% per year of the inventory value. And it says calculate the inventory costs per annum per year for the following order quantities and plot them on a graph. Let me show you what I mean. First of all, suppose we order 500 units each time. What costs will there be? Well, there's this ordering cost, we call it the reorder cost. And remember, every order we place costs $20. Well, how many orders will we need? We're buying 40,000 a year. If we're ordering 500 each time, we'll need, I should be able to do it in my head, but I always get muddled on zeros. Is it 8 or 80? 40,000 divided by 500. 80. So we'll be placing 80 orders over the year. And since each order costs us $20, delivery charges, admin charges, over a year per annum, 80 orders at $20 comes to $1,600. In addition, there's what we call the holding cost. We're ordering 500 each time. Well, as I illustrated a few minutes ago, it will mean our inventory levels start at 500, fall to 0, back to 500. Throughout the year, they're going between 500 and 0. And so on average, there'll be 250 units, the average inventory. So it's as though we're holding 250 units throughout the year. And how much does it cost to hold? It says the costs are 10% of the inventory value. What do we mean by that? Well, remember, each desk is costing us $25. So the cost of holding one desk for a year will be 10% of $25, or $2.50. And so what's the total cost over a year? 250 units at $2.50 each. 625. A total 2225. So those are the inventory costs will be if it's 500 units each time. But it says do it for all 4 of those. So what happens if we change and order 750 units each time? Well, the reorder cost We still need 40,000 a year, but if we order 750 each time, we'll need fewer orders. 40,000, 750. 53.33 orders. Some people get upset there, I'll come back to it in a minute, but arithmetically, 53.33 at $20 a unit, an order. Well, it was actually 53.33 at 20. It comes to 106.7. Now, before I carry on, some people say, oh, you can't have 0.33 of an order. Well, we can, because we always assume that this is going to be a long-term policy. And so what in fact would happen is the first year you'll perhaps have 54 orders, but you'll have a few units left. And so the next year you'll only need 53 orders, and so on. So on average, it'll be 53.33 orders a year. And so if this ever arises in the exam, don't round it. Assume it's long term, that's the average number of orders. What about the inventory cost? Or the holding cost, sorry. It's 750 each time, so the average inventory will be half of it, 375. And again, the holding cost is $2.50 a unit. And so the holding cost, $3.75, $2.50, $9.38. And so what happens to the total cost? I get 2005. And so in fact, that's cheaper. It would be better to order 750 than 500. And see what's happening. With a bigger order quantity, we needed fewer orders, so the reorder cost falls. But with a bigger order quantity, we've got higher average inventory. And so the holding cost increases. All right, well, the question wants us to do it 4 times. I don't know, it might be an idea if you paused the lecture and had a go at the other 2 yourself and then came back and checked. But I'll carry straight on. If we order 1,000 units each time, the reorder cost, we still need 40,000. 1,000 units each time is 40 orders. And at $20 per order, that falls to 800. The holding cost, 1,000 units each time, so the average inventory is 500. And the cost of holding 1 unit for a year, we decided earlier, was $2.50. $12.50. And so the total, 2,050. So again, the reorder cost has fallen. We're ordering more, we need fewer orders, but the holding cost has gone up. And finally, D, 12.50. The reorder cost, which I can't spell, $40,000 needed a year, $12.50 each time. This time we'll have how many? 32 orders, $20 each time, $6.40. So I keep saying, but with bigger order quantities, the order cost over the year keeps falling. But of course, the holding cost will increase because the average inventory is now 625 units. And at $2.50 per unit per year, 1563, the total 2203. And now don't worry, in the exam you're not going to be asked to do a whole series of them like this, it'd be ridiculous, but they could pick any one of those so that you can prove that you do understand what's happening. This one says plot them on a graph. Now you wouldn't be asked to draw a graph in the exam, but it is important you see what it would look like. I'm not going to do a pretty graph. I'm not, and you wouldn't be drawing one in the exam. But do appreciate that, first of all, the holding cost, the more you order each time, the higher the average inventory, therefore the higher the order cost over a year. The order cost per annum will go like that. Sorry, I beg your pardon, the holding cost per annum. Because again, the more you order, the more the average inventory, the more the holding cost over a year. On the other hand, the order cost, as you've seen in those four, the bigger the order quantity, the fewer orders you need. And therefore, over a year, the lower the order cost. And so this falls. Now, in fact, it's a curve. Oh dear, that's not very pretty. In fact, it is a curve, but that doesn't matter at all. All that matters is that it falls the total order cost. And again, look back at those four we've just done. As the order quantity increased, the holding cost per year went up, the order cost per annum went down. And what we want to do is find the one that's the cheapest total. So at each stage, add the two together to get the total. And the total of the two will in fact go something like that, which again, my hand's not very steady. There is the total inventory cost. And again, look back at our example. We only did it for 4, but it started at 2225, we changed to 750 units and the total cost fell. Changed to 1,000 and it went up. 1250 it went up even more. It will be a curve. And of course what we want to do is find which order quantity gives the minimum total cost. We call that the economic order quantity. And in our example of the 4 we've chosen, 750 was the best. It gave us the cheapest cost. But we can't guarantee it's 750. What about 800? What about 700? We haven't tried enough. But we want to know which order quantity. Is it 750? Is it 700? Is it 650? Is it 800? But which order quantity would minimise the total cost? Now, of course, you could draw a proper graph and guess at more levels, do it at 600, 700, 800, do it that way. But that would be a bit ridiculous, because there is in fact a formula which is given to you in the exam. It's on the formula sheet at the front of the notes, but there's a formula which will tell us what the best order quantity is, the economic order quantity. You're not required to prove it. It's actually quite easy to prove if you remember how to differentiate. But proving it is not in the syllabus. I'm not going to waste time here. You've just got to be able to use it. And the formula, it's printed there in the notes as well as on the formula sheet. The only thing is, which is a bit annoying, I always think, is although they give you the formula in the exam, they don't tell you what the symbols mean. So you do have to remember that and then be able to use your calculator. But the economic order quantity, as you can see, is the square root of 2C0D over CH. And let's use it, example 2, let's use it for the figures we had in example 1. D is the total demand. Which, if you look back at example 1, the demand is 40,000 per year. C0 is the order cost each time. And again, if you look back at example 1, the order cost each time was $20. And finally, CH. Now, different people word this differently, but it always means the same. It's the cost of holding 1 unit of inventory for 1 year. And if you look back at our example, example 1, it said it was 10% of the inventory value, the purchase price. Purchase price was 25, and therefore CH is $2.50. It's then simply a question of putting it in the formula. So the economic order quantity is square root of 2 times C0, the order cost 20, times D, the annual demand 40,000, divided by CH, the holding cost $2.50. Make sure, obviously, you've got a decent calculator. But what is it? 2 times 20 times 40,000. Divide by 2.5. Take the square root. I get 800. And so there is the economic order quantity. It's at 800 units that the total costs will be minimised. And let's just check here, because example 2 says A, calculate the economic order quantity, but B, what are the total inventory costs for the order quantity? Well, let's do what we did before one last time. First of all, the reorder cost. Remember, we needed 40,000 units a year. We're ordering 800 each time. So we'll need 50 orders at $20 each. Over a year is 1,000. In addition, the holding cost, if we're ordering 800 each time, the average inventory, as always, will be 800 divided by 2. The cost of holding each unit for a year is $2.50. 1,000. The total, 2,000. And although that doesn't prove it, obviously, certainly of the 5 we've now done, that's the cheapest cost. And try any other level you want. The minimum cost will be 2,000. Think back to that graph. It'll be 2,000 at an order quantity of 800. A couple of things before I leave this lecture, because I want to split this chapter into several lectures, otherwise it gets too long. One is the economic order quantity. Those two do happen to be equal. Well, they do, but that is rather irrelevant. For the exam, you've got to be able to use the formula, and you've got to be able to do the costing. So we've done the costing enough times. The formula is just practice. You can try some questions later in the online test. The other point is, do appreciate all the way through here, we've ignored the purchase price that we're buying 40,000 a year, because that could be the same cost whatever happens. But there is just one time when that may be relevant, and I'll show you that in the next lecture. We'll stop this one here and then we'll carry on in the next one.